What if one number could determine whether you get approved for a home, a business loan, a car, or even an apartment? That number is your credit score. And moving forward, financial experts agree on one thing: financial literacy will become more important than ever. As lending rules tighten and the economy continues to shift, the people who understand how credit really works will have access to opportunities, while those who don't may struggle to move forward financially. Welcome to Cube Capital TV, where we talk about funding, financial strategies, and tools to help you grow financially and as an entrepreneur. Today, we're breaking down why understanding credit could be one of the most important financial skills in the coming years. Why credit matters more. Now, credit affects far more than just loans. Your credit profile can impact mortgage approvals, car financing, business funding, credit card limits, rental approvals, and sometimes even job opportunities. As banks and lenders become more cautious, they rely heavily on credit data to decide who they consider financially responsible. This means your financial habits, how you borrow, how you repay, and how you manage debt, are constantly shaping your financial reputation. Think of your credit profile as your financial report card, and the better your financial report card, the more doors open for you. The 4 credit factors everyone should know. There are 4 key factors that determine how lenders view your credit. First is payment history. This is the most important factor in your credit score. Paying bills on time consistently shows lenders that you are reliable and responsible. Second is credit utilization. This refers to how much of your available credit you're using. For example, if you have a $10,000 credit limit and you're using $8,000 of it, lenders may see that as risky. Financial experts recommend keeping utilization below 30% whenever possible. Third is length of credit history. The longer you've had credit accounts open and in good standing, the more confidence lenders have in your financial behavior. And fourth is debt management. Lenders look at how much total debt you have compared to your income and credit limits. Too much debt can signal financial stress, while balanced credit use shows discipline. Understanding these 4 factors alone can dramatically improve how someone manages their finances. Why financial literacy is the real advantage. The truth is, many people were never taught how credit works. Financial literacy isn't always taught in school, yet it affects nearly every major financial decision in life. The people who learn how to manage credit wisely are better positioned to qualify for funding, build businesses, purchase homes, and create long-term financial stability. Credit isn't just about borrowing money. It's about access to opportunity. The economy will continue to evolve, but one thing remains constant: knowledge is power, especially when it comes to money. The more you understand about credit, debt management, and financial strategy, the more control you gain over your financial future. If you found this helpful, make sure you subscribe to Cube Capital TV for more insights on credit, funding strategies, and business growth. And remember, financial success isn't just about how much money you make, it's about how well you manage it.